Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, June 21st, 2018. Markets are closed, so this is a market wrap for today. And this video will be very similar to the one that I put out this morning, although I'll only focus on the daily charts. This morning I went over the 60-minute charts, the QQQ, as well as the top six components, which make up the bulk of the returns. So what I'll do now is just a quick video on the daily charts, how we close today, because of course the daily charts are more significant than what happens on the intraday chart. So let's just dive into this. This is the same QQQ chart I've been talking about recently, highlighting the developments worth noting are this uptrend line, recent breakdown right here. You can see this uptrend line, breakdown, back test, 1, 2 days, and then we rolled over today. Now, what's new since the last video, we do have this bearish engulfing candlestick, and that's a pretty powerful bearish engulfing candlestick. Those, by definition, a bearish engulfing candlestick, the body it completely engulfs the previous day's body, which you can see there. There's the body, the fat part. So a clean bearish engulfing candlestick. And what I like to see is follow through. Now, I might have pointed out we had a bearish engulfing stick back here. Now, of course, the more of the previous candle is engulfed, the more bearish it is. So this one was slightly engulfed the previous body. But more importantly, and I believe I stated back at the time, you need to see follow through on the downside. Bearish engulfing candle by definition comes after an extended uptrend. And at least in my book, for confirmation, you need to see some follow through on the downside. That means a red candle tomorrow, ideally a red candle. I mean, we could close slightly green, but the more red that we close, the better, if that makes sense. And the following day as well. Tomorrow's Friday, so that would mean a down day on Monday, and that should really help firm up the case for a correction back to, let's say, at least this 170, 167.33 level and or this uptrend line. They both come in together. So we're still looking at, and I think that'll happen, we're still looking about another almost 5% downside in QQQ if that happens. And again, that would be my minimum swing target there. So we do have the crossover as well, the bearish crossover on the PPO that I talked about. Let's look at this. PPO histogram shows that crossover. We actually had it yesterday, but it was slight, and now we have a pretty decent. You can see the how far that histogram is down, more so than this little whipsaw signal that we had back here. So that puts, at least by that one trend indicator, puts the Qs on the first sell signal really since back here in April 12th. So that's a pretty solid case. So we have three things there. We have the recent breakdown and backtest, number one, following the divergent high, number two. We had the negative divergence again that's been building. So there's two bearish strikes, if you will, or check boxes. Rolled off the backtest and the crossover, the bearish crossover on the PPO. So looks, like I said this morning, looks pretty good. And with the big red close today, down almost 1% in the Qs, I think there's going to be more downside to come tomorrow and into next week at least. All right, let's just go through the top components and we'll wrap it up. Keep it quick. Now, the QQQ, as I often say, is simply a sum of its parts. And now you can look at all 103 or so stocks within there, or you can just look at the top handful of stocks, half dozen or so, and that will account for the bulk of the returns because they're so top heavy weighted. So what do we have recently? Well, we have Apple has this 2-year chart shows you a series of divergent highs, and each and every case on these divergent highs that are marked, they are followed by corrections ranging about, almost all of them in double digits. This one was 9%, so you can see 12, 10, 17%. I didn't measure this one out. I should add that there. From that point down, I can tell you right now where it ended in that divergent low. That was a 12% drop. So this is simply an extension of these previous divergences. We've had, Apple's walking its way up. So two ways to look at it. You can swing trade these divergent highs, but these divergences are building, so sooner or later they could manifest into a much larger drop. Either way, let's look for Apple to come back down to at least that 200-day moving average. That seems to be a key level on Apple. I use it also on the weekly chart as a 40-week moving average. It's the same thing when you put a 40-week moving average on a weekly chart. It's the same as a 200-day on a daily chart. So that would be a natural target for this pullback. And you can see the last couple of times Apple has sliced through there. I don't know if you can make that line out in the video, but there it is, the red line. So again, that would be an ideal target for Apple. Just eyeballing this daily chart. I haven't zeroed in on the targets yet. But there it is, divergent high, and you can also see a bearish engulfing candle. Now, by definition, again, the bearish engulfing candles for a reversal pattern usually come after an extended uptrend. For example, let's take a look here. We had a bearish engulfing candle there. And it was confirmed with some downside, big red candle afterwards, and boom, that marked the top. And I'm sure if we go back, we could probably find a few. In fact, let's just jump back to QQQ because I meant to talk about that. So there's today's bearish engulfing candle. I should have made mention just to show you the history. Again, ignore these if they come right after a downtrend or anything else like that. For example, here was a bearish engulfing, and sure, there was more downside, but that is not at the end of an uptrend. So here's what you watch. We had a bearish engulfing candle. We also had that PPO cross. We also had a divergent high. Those exact conditions right now, and that's what we have here. In fact, we can also probably draw a trend line there, and I'm sure I would have had one on the 60-minute chart, real uptrend line there. So you had an uptrend line break, negative divergence, bearish engulfing candlestick, bearish PPO crossover, and there was the biggest correction that Apple's had in years. So take it for what it's worth. That's what we're seeing here today. We'll go back in time again. Here's another bearish engulfing candle. This wasn't a very big correction, but it was the biggest correction in many months. And up until these two drops in early January, February, and then again in March, this was the biggest correction that Apple had, and it was kicked off by a nice fat bearish engulfing candle. So I really like these sticks. It's simple but effective, and again used in conjunction with other buy and sell, or at least sell signals if we're talking about a bearish engulfing candle, such as a trend line break, such as a PPO bearish crossover on the PPO. Again, 1, 2, 3, all right here, here, and here. So again, I see no reason not to expect some more downside. A couple more stocks and we'll wrap it up. Amazon, also, very big component of the NASDAQ 100. Nice, beautiful bearish engulfing candlestick. It doesn't get much better than that. All we need now is confirmation with additional downside. You already have negative divergence. You have a large rising wedge here in Amazon, similar to the wedge in Intel, which we'll get to in a second. So again, I look for more downside, especially if confirmed. If you don't want to jump the gun, and I get it, the trend has been very strong, resilient. They've been buying dips. They didn't buy the dip. They tried to buy the dip today, and that got faded. So that's a little bit of a change of character. I always say this, one day doesn't make a trend in the market, but I'm starting to see some change in character here in the markets. And like I said, when you look at today's price action and cues, if you're sometimes I forget a lot of you don't have the luxury to trade full time, so you're coming home and watching this video after work. This was today's price action. The daybreak line was right here. This is where we started the day's trading, and you can see that we had initial sell-off. There's the open. We popped up, faded that, went down, and then they stepped in. The dip buyers started buying the dip right here, and I looked at I go back? I looked at a 15-minute chart going back several weeks or more, and you can see that nearly every dip in the Qs was bought back up. If there's time at the end of the video, I'll show you that. I'm sorry, was bought up. Every intraday dip like this was bought up. And if you bought that dip and held into the close, you were profitable. All but in I think one or two instances, and going back for weeks now. And so far, well, today that was not the case. You can see the dip buyers stepped in there, and they ended up, you know, if they hit the bottom, they were lucky and they just closed right about where they bought. If they bought after they waited for the reversal, anytime here, they're upside down. So again, that's a change of character. Here's Alphabet, GOOG, divergent high back here. Most recently, we just put in a divergent high. We eked out a marginal new high here. We had negative divergence on the indicators of PPO and the RSI. And like everything else, there's another bearish engulfing candle. You can see comes on the back of that doji yesterday, engulfs the entire body of that doji. And that also followed an inside day. An inside day, see this red candle, when the trading occurs within the previous day's price action. Sometimes those often act as reversals, whether it's at the end of a downtrend or at the end of an uptrend. And so in this case, you had an inside day followed by a doji, and so far that's been engulfed. If you look at the last time we had a bearish engulfing candle on Alphabet after an uptrend right here, you can see a big fat bearish engulfing candle, and that was from the high that it engulfed. This was a 17% drop in Alphabet. So, pretty good stuff. And again, so here's some target zones. I don't have, let's just move on because I don't have the exact targets identified on each of these stocks right now. I'm just looking at more of a, collectively how the Qs look by analyzing each of their top components. This is the other share class, Alphabet Class A, for those of you who prefer to trade. Same story, bearish engulfing candle, really nothing else to report. Facebook. Facebook's actually, of the whole lot, these top components, it looks better than most. Really hard to knock it here. There is divergence. I'd be remiss not to point that out. It's not very steep, although it is steep if you compare the ascent in prices. You look at this most recent thrust up. So what I've just done here is added a wedge. I'll color that blue to let it stand out for you. There's a nice rising wedge, and it's a pretty steep wedge, and you can see the divergence down here on the indicators as they're failing to make higher highs in prices. So we had a divergent high back here that was pointed out at the time. I put question mark drop, expect us to drop somewhere in that range. That was a 23% drop. So, wouldn't surprise me to see that much or more, but we'll take it day by day. Let's see how the charts pan out here in the next week or so. So that's it. I'm just checking off the boxes, and for some reason, hold on. I moved off my watch list of the components. So we covered Facebook. Here's Microsoft, Mr. Softy, big bearish engulfing candle as well. Wash, rinse, repeat. We had one right here, but again, you can see that in the next few sessions, we only traded sideways. We didn't have any follow through to the downside. So let's see what happens. But what we do have is a nice clean uptrend line right here on the daily chart. This is what I call the minor uptrend line, and this is my primary uptrend line. I do have an alternative trend line here as well. They all catch a lot of reactions. So we'll keep an eye on all of these. If and as each one breaks, that just chips away at the bullish case. But again, it's these large divergences that have been building, even leading into the January highs, and have continued to build as mostly the tech stocks have pushed to new highs, and namely these FAANG stocks that I'm talking about, and not the majority of sectors and stocks in the market. So that's not a great sign overall. And finally, we have two more. I already covered Facebook. One more, Intel. Intel, again, here's that rising wedge I mentioned earlier. Daily chart, nice clean bearish rising wedge. We had a bearish engulfing stick today, but we've already topped. Intel has clearly put in a top, and this is just additional downside today. Pretty ugly action that it wiped out that move yesterday and then some. Yes, it was news driven, you can say that, but then again, the news follows the charts, and I'm a firm believer that headlines often will match. And if they don't have a headline, I'll tell you what, they'll pin a headline to it. And the press will, the media will. Yes, their CEO, was terminated today, but again, the chart speaks for itself. This stock was already in a downtrend and continues to be. And this is one of, as I said, it is the largest semiconductor stock, and it's already down over 10%. So this is one's already in corrective phase right here. And we really haven't had much of, we had a little bit of a kickback rally here, but you can see my levels that I have marked. And again, I'd have to zero this in, but I do think we're headed down to at least this 50, 68 level. And just why might as well, since I talked about semis, mention here also a bearish engulfing candle. Now we had a bearish engulfing at the top right there. So the semis have already started correcting. They already put in a bearish engulfing candle, broke trend line support, and have been moving lower. So that's it, guys. There's not a single thing in this chart right now, this charts that give me pause. Again, we don't have an all-in, sell the market, get out of your long signal yet. I think it's coming, but that will be confirmed or not confirmed in the next few days here. So let's see how we trade tomorrow and into early next week. How you trade is up to you. If you want to start stacking, you can take a starter short position if you haven't done so already. At this point, with the market being closed, wait to see what happens tomorrow. But if it looks like we're going to print a pretty decent red close, there's a good chance we'll follow through to the downside next week, and at that point you may want to add to some short positions if you're opened, or if you're long and you've been capturing this rally long, it may be time to start reeling in some profits and booking profits on those stocks. All right, this has been Randy Finney with Right Side of the Chart. Have a great evening.